And now let's talk about the biggest buzzword in the blockchain space right now, DeFi. It's a policy day, so what better way to explore a theme that has its roots in operating outside of the system? I think you're going to enjoy hearing from this next star-studded panel. We have Zach Prince, CEO of BlockFi, Martin Bott, Chief Product Officer at Jumio, Bill Bart, CEO of Abra, and kicking us off is Jason Jones, Chief Commercial Officer at Centrifuge. Jason, thanks so much for being here with us at Meridian. We can't wait to hear this discussion.
Great. Thanks so much for having us. First of all, can you hear me? We're live? Okay, we're live. Okay, great. Okay, thanks everybody for coming. This panel is the next frontier, DeFi high yield assets lending. We're going to start it off by just going down the line and letting everybody introduce themselves. And once we get through the intros, our panel is going to be focused on thumbs up, thumbs down. I'll ask questions and then we can debate the questions. It's going to be interactive, hopefully a little fun, and everybody will kind of get to introduce themselves, what they work on and what their views are of our industry through this process. Our panelists will also ask questions. It won't just be me, so we'll have kind of an interactive session. And at the end, if there's time, we will open up for questions as well. I just want to, first of all, thank Jed, thank Mark, thank the entire Stellar team for having us. And then also, I just want to say that this panel, I know some of the other panels so far have been focused on what's happening in the Stellar ecosystem. This panel is more focused on what's happening in the DeFi ecosystem, and just to kind of give a flavor for what's out there and what's happening. So we'll probably focus less on Stellar in this particular panel and more just on the general market. With that, I'll pass it to Martin first to introduce yourself, and then we'll go down the line.
Thanks. My name is Martin, as you have heard. I've worked at Jumio. I've been there for 5 years. We're actually not a DeFi business, but we are a lender in the Africa and Asia region. And we've been taking a very non-traditional approach to financial services, but we work with a lot of traditional financial service companies, such as banks and insurance companies. We actually offer our customers lending products and savings products. And we are currently present in 7 countries and serving approximately 17 million customers. So we've scaled our operations quite nicely. And now we're kind of looking at the next phase, which is bringing us closer to what this panel is about.
Great. And Bill, you're next.
Sure. So good morning and good afternoon if you're on the East Coast. My name is Bill Barheit. I'm the founder and CEO of Abra. Abra is a leading cryptocurrency wallet and crypto banking service that allows you to buy, sell, hold, trade, and now earn interest on lots of different cryptocurrencies, Bitcoin, Stellar Lumens, Ethereum, et cetera, et cetera. We operate in about 150-ish countries today with customers in all of those countries. And like I said, we operate also a lending service and also a high yield service that services both consumers and institutional investors. So looking forward to getting into the details.
Cool. And to you, Zach.
Yeah, hey everybody, Zach Prince. I'm the CEO at BlockFi. We are a financial services company in the cryptocurrency space. We have both retail and institutional facing products. On the retail side of our platform, folks can use our mobile app or our web app to earn interest on their cryptocurrency and stablecoin holdings, buy and sell cryptocurrencies. We don't have Stellar in there yet, but hopefully we will very soon, and get loans secured by the value of their portfolio. Additionally, early next year, we're launching a Bitcoin rewards credit card, which I'm really excited about. And then on the institutional side of our platform, we're one of the largest lenders of cryptocurrencies, including Stellar, to institutional market participants in the space. So thanks for having me. Happy to be here.
Excellent, thanks. And finally, I'm Jason Jones. I'm the Chief Commercial Officer at Centrifuge. We're a decentralized lending protocol. A protocol is a system of collaboration. So we help multiple parties collaborate in order to finance assets using DeFi. Today, it's a two-sided marketplace where we have asset originators on one side, that are taking loans from DeFi and deploying that capital to their borrowers. And on the other side, we have investors. So far, the investors have been individual crypto investors that are investing in our protocol, but very soon we will be bridging our protocol to MakerDAO, and that'll be the first time a DeFi protocol will finance another DeFi protocol in order to finance an asset originator. It'll bring real world assets to MakerDAO, and I think that's a key point for our business, and I think for the industry, when DeFi protocols are actually kind of creating new stablecoins to finance real world assets. I'm going to jump into this Q&A session now. We're all going to answer, so it's not just one-to-one. Everybody throw out answers. And it's thumbs up, thumbs down. So we will start with the first question, which is it possible to earn 6% plus on a savings account with virtually no risk? Thumbs up, thumbs down. Thumbs down. Okay, let's hear it. Let's start with you, Martin. What do you have to say? Why thumbs down? Oh, thumbs up, sorry.
Remove the cost of the system and look for markets where interest rates are generally higher anyways, and we're offering it today, so that's why I'm saying
virtually no risk?
At virtually no risk, depending on how you deal with currency fluctuations. But in our markets, interest rates are obviously much higher than in the States or in Europe. So for us, it's quite normal, and interest rates are very different here. And if you reduce the system costs and the operational cost from it, then interest rates will go much higher anyways. And we're trying to get the best out of both worlds in that case.
You guys can all ask questions to Martin, but is it a saving? Is it actually savings? Do you consider an investment, or is it savings? And how is it liquid?
Yeah, just the basic liquid savings account. We get yields that are higher than that. Or we get interest back to the customer that's higher than that, 9%, 10%.
Super interesting. Bill, Zach, what are your thoughts?
Yeah, I gave a thumbs down for kind of a technical reason, because the word savings account was embedded in the question. And I think the word savings account comes with a particular, product and regulatory implication, at least in the US, that it's something being offered by a bank with FDIC insurance. Most of the interest earning products in our neck of the woods are not being offered by banks and don't benefit from FDIC insurance. There are certainly emerging markets where you can, in savings accounts at banks, earn north of 6%. But that's, of course, denominated in whatever the currency is in that country. At BlockFi, we offer interest rates currently in our interest account of 6% for Bitcoin, 8.6% for stable coins, and between 4 and 5% each for Ethereum and Litecoin. And we think it's incredibly low risk, but I think it's important to be conscious of how we as an industry position risk, and how that risk is marketed and disclosed to folks, and how people are educated around understanding these risks, especially in light of the recent news around Cred going bankrupt and potentially having lost $100 to $150 million worth of folks' money. So I think this is an area where, as an industry, we would be well served to maybe be a little bit more thoughtful about what we're saying. So I'm thumbs down for technical reasons. I think it's very low risk. Okay. but I think you have to be really careful.
Low risk
clarify
and
my statement. So the product that I was speaking about, they are actually regulated, and they are with some of the biggest banks on the continent. So that's the difference, I think, between our model and the other panelists here, because we actually have to go through all of that burden.
And can anyone around the world invest in these savings accounts, or do they have to be in the country where the savings accounts are offered?
What currency?
So we have savings accounts at this moment in Zambia and in Tanzania, so it's in shillings or in kwacha.
Okay. And I didn't hear the answer to my question. Can anyone invest or save, or just
No,
residents?
you have to be in the country.
Pretty sweet deal.
Sorry.
Bill, what are your thoughts?
Yeah, I think Zach said it very, very well. And it's been a great steward of the space on many levels. Look, I mean, if you're investing in essentially is an investment grade product, and again, I think you said it well, not a savings product, you have principal risk. There's no way about it, right? Yes, there may be third parties backstopping that in the case of certain government-backed products, but if you're investing in an investment grade product, you need to understand that yes, we offer 10% interest on dollars, 5% interest on cryptocurrencies, which is fantastic. That's where I park my own cash and my own crypto. But I also accept the fact that it's not the same risk as putting it in a hardware wallet. And I think that risk is minimal to zero, close to zero. Otherwise, I wouldn't do it. But there's a difference between zero and close to zero. And I think it's very important to distinguish amongst all of those things and be very clear to consumers what it is they're getting. And that has nothing to do with your product, Martin. I don't understand all the details, but I'm just kind of reflecting on how we look at the offering of an investment grade product.
So if you had two accounts right next to each other, both of them fully liquid, one earns 7% and is an interest account, and the other earns 5% and is a savings account. The difference is that the savings account is FDIC insured. What if the interest account is backed by some big insurance company? Would you consider it a savings account, or is it still an interest?
It's a very complicated question because in the US, there's a whole bunch of high yield services. And remember, FDIC insurance only applies up to a certain threshold. So even then, you're only being backstopped by pooled losses up to an insurance fund up to a certain amount of money.
250.
Right. And a lot of these high yield services, people are investing 7-8 figures. And so insurance goes out the window at that point. Right.
Yeah. Although they do a sweep and they put 250K into 50 banks and therefore get there.
Right. Right. But again, there's all these high yield services and I've tested them all. And, when there's principal loss and it's due to fraud or whatever, an army of lawyers swarms on the counterparty. I mean, it's, God help those counterparties and good, so, but that's a very different business from a bank repo money market account, right? A bank repo driven money market account, which is, still keeping 80% of the profits at the bank level, passing on, 0.15% of something close to zero, but it's a totally different mindset. And you have to get your, look, not everybody is going to dig in to the extent I would want them to, but at some fundamental level, they need to understand that this is not a money market account.
Okay, cool. Let's go to the next question. Bitcoin, good day to talk about Bitcoin.
It's always a good day.
Will Bitcoin become a global reserve asset? Thumbs up, thumbs down. Thumbs up, thumbs up. Thumbs down. All right, we got some debate here. What do we have? Who wants to go first?
Just speak up. So maybe I'll go first. Okay. So this was the TED Talk I did in 2012. Couldn't figure out how to present Bitcoin. A bunch of TEDsters had never heard of it. So I actually chose this angle. Does the world need a new reserve currency? It's very simple, right? We are basically debasing our currency at an unbelievable, unsustainable rate. If you have a collectible item and you think the item is worth X, and you find out tomorrow there were 100 more of those items, 100X more of those items than what you would originally believe, it stands to reason that the value of what you have is now significantly less than it was yesterday. We're doing that with money, with paper money, at an unbelievable rate. The rate of currency inflation is unsustainable. We simply have this perspective that because the dollar is a reserve asset, that by definition, it becomes a circular discussion that will get away with printing more. Well, eventually everyone is going to say, enough, and they're just going to move to something else. And why not move to a provably hard currency that is easier to move around, provably scarce, and as a 10-year track record by the time it becomes a reserve asset, probably 25-year track record of simply working, right? And I think that Bitcoin fits the bill. There may be something better, an evolution of the technology in the next 15 years, but either Bitcoin or something close to it will become that reserve asset for many countries, I fundamentally believe.
Bill, are you a crypto bull or a Bitcoin bull? Because I only hear you talking about Bitcoin.
Well, your question was about Bitcoin. I understood your question about Bitcoin.
I know. I'm just kind of curious. I'm just curious. I know
I'm
you laid
a
out your
crypto
thesis
bull.
on
I mean,
Bitcoin.
full
Okay.
disclosure, Stellar's an investor in Abra. We haven't announced why and what we're doing. I'm really excited about it. We offer 100 plus
Intrigue.
cryptos in Abra. I talk about this all the time. The primary advantage of having so many different projects is competition, technology competition. The harder and the more valuable Bitcoin becomes, for example, the harder it's going to be to make changes. And the less incentivized people will be to change the network. That's okay. But we need competition to show us the way. Litecoin making changes to the blockchain that Bitcoin may not make right away, or at all for that matter. Right? You know, Stellar looking at Ethereum, for example, and starting to think about smart contracts. I think that's fantastic. So it's the competition that will ultimately create different use cases, different types of scalability under different scenarios. And we need that as an ecosystem. We need it desperately.
Yeah, I think for the reserve asset question, going back to the original thesis, I feel like we're in one of those scenarios with Bitcoin now where we're past, you know, the big knock on any new asset class is usually that it hasn't lived through a cycle. We've got these big blowups of one shape or another roughly every 10 years in modern, you know, economics. And until something's lived through a cycle, it's really hard to trust it. Well, Bitcoin just lived through a cycle and it's, you know, kicking ass. So I feel like because we're now past that point in time, it's going to become increasingly clear to a new set of people that this thing has momentum, it has staying power. And that is going to be the new cycle. It's just like what new kind of class of investors or, you know, category of institutions are we steadily breaking into over time? And where I think that ultimately goes, and I don't know if it's 5 years or 20 years or 40 years, is it becomes, you know, part of the composite of reserves that, you know, back central banks.
What are your thoughts on?
I'd rather bet for it than against it, for sure.
What are your thoughts on Ray Dalio? Ray
Context of
Dalio's
tools,
view,
right?
Zach. Hold on, Zach. I just got to ask Zach. What are your thoughts on Ray Dalio's viewpoint?
Oh, I put out a whole tweet thread on this yesterday. I mean, I'm so disappointed. Like I've literally helped model, you know, values at startup companies off of some of Ray Dalio's principles, and I've been a huge fan of his for a long time. And you know, one of the concepts that he talks about is paradigm shifts, and I feel like he's, you know, commenting on this industry, which I think is in the process of causing a global paradigm shift in economics, and he's just completely missing it. And frankly, presenting himself as a thought leader on something where he clearly just has not educated himself about what's going on. And that's just really unfortunate for me to see as someone who, you know, like has really looked up to, you know, some of the stuff that he's put out there in the past. And so, you know, I just kind of tore down, he put out these like 5 points, like this reason, this reason, this reason, this is why it doesn't make any sense. And I just like ripped each one of them down in this little Twitter thread yesterday. So who knows if he's going to pay attention. I mean, look, he's getting towards the end of his career, and he's writing books, and he's, you know, becoming a philosopher, and his fund doesn't perform very well, and no one cares because it's Dalio, and like
it's so hard, you know, it's so hard to have principles when you are a market investor, and when you're wrong, you have to admit you're wrong and readjust quickly. If you hold to your principles, you will get run over, right? So
yeah, but look
one
at Rubini,
principle is
right?
the market's always right.
Look at Rubini, right? I was on that infamous panel at Milken with him, and we went at it for an hour and a half, and he, you know, he was spewing bullshit for 90 minutes and wouldn't stop. And I'm starting to see cracks in the ice the last couple of days, because you only, I mean, how many times are you going to be hitting the head with the ice spike before you start to realize that you're wrong? Now, I think Dalio is very early in his thought process. I think Rubini's been at it for too long. He should probably retire. And you know, but still, he's starting to get there. The other thing I'd say, you know, and I agree with everything Zach said. Unfortunately, it's all true. But you know, think about tulips. After the tulip bubble burst, tulips didn't get back to peak price they were at when the bubble burst. It didn't happen. Yet here we are, Bitcoin pushing new highs versus what everybody considered to be the bubble. And I think the fact that retail isn't involved to a large degree, and it's institutions who are not just looking at Bitcoin, but are looking at a lot of different cryptocurrencies in the space is extremely encouraging to me, because that tells me that there's a lot of smart people looking at the fundamentals of cryptocurrencies as hard assets, as the basis for smart contracts, as the basis for stable coins, and they're starting to get it. That's extremely encouraging.
Martin, what are your thoughts? You seem to have a contrary thought.
I think my thought is more about that it's probably not going to be Bitcoin. I agree that it will be some kind of crypto, but I think because Bitcoin was one of the very early ones, it has a lot of stigma and it's very early in terms of technology, and there will probably be something that comes up which is more suited to becoming adopted by governments, and it's still far down the line. So by that time, there's probably going to be something which is better from a technology point of view and also gives governments a bit more what they're looking for.
Gotcha. Okay, I want to move on to some different questions. Back to DeFi. Trustless decentralized protocols will be unstoppable. Up, down. Three downs. Anyone have a view you want to share?
So my favorite analogy is the Matrix, right? So I assume all middle-aged men, everybody's seen the Matrix. That's good. For those of you out there who don't know the analogy, because you're not a middle-aged white guy, basically, you have a hard line into the Matrix, which is how you hack into the VR world that controls the human species. Well, we have this problem in DeFi that there's no D, right? Because if you're running a smart contract, that smart contract needs to know information about the real world. And that's established via these pricing oracles for the most part, or oracles that do other things. And as soon as you have an oracle, step one, you have an off switch by definition. I don't care how many nodes or whatever technical parlance you want to put around it. That doesn't mean that the technology and the use cases aren't compelling. It just means that it's not truly D in the sense of, what people really mean when you think about DeFi. And by the way, I use these services. I think they're fantastic, a lot of promise, but we have to start calling things what they are. And DeFi is an unfortunate phrase. And the other thing is if you look at how a lot of these nodes run, if you shut off Amazon Web Services, I have a feeling that a significant percentage of things we're calling DeFi would disappear overnight, which is very disconcerting when you're calling them decentralized. So sure. We're not even close to a model that's truly DeFi, but the theory is incredible. And so promise is there, but and the research is fantastic, right? And what people are doing and testing, but we're 10, 15 years away from truly eliminating the dependency on the physical world in any measurable way that I can ascertain, if it's even possible. I don't even know.
I'll give you an example of a decentralized network that has withstood the test of time. BitTorrent.
Absolutely.
Right? So BitTorrent is, many would argue that BitTorrent's primary use case is to steal copyrighted movies and film, et cetera. Yet the Hollywood has not been able to shut it down.
After 30,000 lawsuits, the RIAA gave up literally 30,000 lawsuits.
Yeah. Now I'm not saying that the business on top of the network has been a business to model yourself right. after, but the network has withstood the test of time. And when I think of a decentralized network transacting currencies, are you sure that BitTorrent's kind of saying it is unstoppable.
Totally different point, because you could create bots that could create file sharing amongst them that have no dependency on the outside world other than the internet connection itself. You didn't ask about the future of Ethereum. You asked about the future of DeFi. And what I'm saying is Ethereum being decentralized and the apps that run on them or the smart contracts that run on them being completely decentralized are not the same thing. As soon as you have to integrate with the outside world, you're not decentralized anymore. You have a central dependency on some entity. And I'm not saying that's a bad thing. It just is. It is what it is.
Right. Yeah, Uniswap goes down, a new version of Uniswap pops up in another location, sure. Right?
And that's great.
Trading completely
those contracts
virtual
are
currencies
dependent upon pricing oracles from the physical world, even stocks. Where does the price of a stock come from? It has to come from somewhere. If the government chose to shut off those price feeds to whoever was creating that contract, you'd have a very hard time pricing stocks on a DeFi system in a way that users would trust is accurate.
Cool. Let's switch to another topic. We talked about Uniswap. Let's talk about AMMs. Will they beat? They will beat centralized exchanges over the long run. Thumbs up, thumbs down. Thumbs down.
I don't even know.
You don't
I'm
know.
like this.
Okay.
I don't know.
Okay. Let's hear you, Zach. You're the one with the strongest opinion.
Look, I think there's moments in time in finance where the system gets stressed, and it's in those exact moments of time where strong human judgment can be incredibly valuable. I think that 99.5 or 99.9% of the time, sure, machines can maybe do things better. But I think that that human judgment can be really critical. And there are a lot of folks that control kind of like the deepest pockets of capital around the world that are going to be, important on the adoption trajectory of this sector that understand that. And as a result, I think you'll still see, the largest volumes of activity happening in places where acknowledgements to the, traditional system and the ability of human judgment to add value in times of stress. And I don't think AMMs really contemplate that. So if you envision a world where, Bitcoin is a reserve asset sitting on central bank balance sheets, there's going to be some, wild events in between now and then. It's going to be an integrated part of the traditional financial system, which today is, many, many, many multiples bigger than our new financial system. And it will have to contemplate the same types of things that the traditional financial system has. And I actually believe that the traditional financial system is pretty efficient. It's one of the most efficient and powerful systems that the world has ever seen. And a lot of these things have been worked out. And oftentimes you have technologists who think that you can just solve it all with code. And I think it's a bit more nuanced than that. So it's not that I don't think AMMs won't be many multiples larger than they are now, and that there's not a very large space in the market for them to exist and make money and add value for clients and users. I just don't know that I would, I would put my money on them eclipsing the size of centralized counterparts down the road.
I agree with what Zach said. I think there's one big exception to that. And it's very specific to crypto and the way crypto works. And that is, if you have systems that trade crypto to crypto, where there's no real world assets involved. And by real world assets, I mean traditional stocks, that have a physical balance sheet, or traditional commodities that you dig up out of the ground, but you're just trading crypto to crypto and they have no basis in dollars. Everything's priced, for example, in lumens or Bitcoin or Ethereum. I can see AMMs actually replacing real world exchanges many years down the road at scale, but it doesn't make sense for every type of trade at scale. I don't see how it possibly could, but I think there's a lot of ways in pure play tokens, not tokenization of physical assets, but pure play tokens, where I think AMMs are going to be a big deal. But I don't think I don't think it's either or. I think they have their place and have their role. And I think traditional markets have their place and have their role, at least for the next 20 years. Maybe that'll change. Ask me again when I'm retired, but I don't know.
Guys, we have a few minutes left before we end this and open it to audience questions. Do any of you guys have any questions for our group? I can keep going. All right, I want to know, this one's particularly interesting to Martin. Crypto lending protocols will flow millions of dollars in high yielding. Crypto lending protocols will flow millions to high yielding emerging market assets. Yes or no?
Those crypto lending protocols will flow millions to
high yielding emerging market assets. So Will they invest? If it's a market that is underpenetrated right now, that has a need for access to capital, will crypto lending protocols provide much needed capital to emerging markets?
I'm doing it sideways because I don't know enough about it. I need to be educated.
Martin, I want to hear from you, obviously, since you're in the emerging markets and you're providing lending capital.
Yeah, so I say yes, because there is a capital need in most of the markets, and there's a lot of untapped potential in the crypto world. So I think they will meet at some point. I don't know exactly how long it's going to take, and it will be quite difficult as well, because they're local players that need to protect the space, and it shouldn't be a crypto market going against traditional banks. But if there's some kind of way that we can actually build something which doesn't upset anyone too much, because then everything becomes more difficult, then I think there's a huge potential there, because one market is basically not getting yields and is looking for ways to get yields and to get interest rates, and the other market is looking for capital and has the interest rates and has the yields. I think for me, it's a logical 1 + 1 = 2, but it's not going to be an easy road. So it's going to be quite a headache to get there. But I think it's an obvious kind of move, while the world is actually more connected with this kind of infrastructure.
Exactly. I would say from
analyzing that at Abra.
What's that?
I said we've spent a lot of time analyzing exactly that at Abra. We think that the opportunity is very significant, and that's probably going to breathe new life into the whole stablecoin model at some point. P2P loan origination in emerging markets is booming. It's evolving in a very different way than traditional lending in our markets. And credit score models are evolving in a totally different way. And then you have supply chain finance, for example, in parts of Asia and parts of Latin America, where Western investors are often shut out of huge short-term financing deals that are usually well collateralized. Not collateralized in the way we're thinking about it in our own little crypto fiefdom, but I think there's a mismatch between the supply and the demand there that I think crypto is going to be very uniquely qualified to help address at scale, and we're particularly excited about that opportunity.
Yeah, I would say from Centrifuge's point of view, this is exactly like a use case that we're focused on. We see that there is both a access to capital issue, as well as a rate mismatch, risk versus reward. Both of those prevent lots of asset originators and ultimately small businesses and consumers from getting the access to capital that they need in many parts of the world. And crypto has a great opportunity to solve that. And something that I've talked to Mark and the Stellar team about, would love to do something possibly with them. When I hear about asset originators like Martin's team at Jumo, there's an obvious need and there's great returns as well. So there seems like there's just a natural fit. And hopefully we can, both make a win-win situation, both for investors and for those that are borrowing. I think with that, we are out of time. I believe we're going to an audience Q&A next, and I will turn it back to our host.
Thanks, everybody. See you.